Let's be direct. A geopolitical crisis that's happening thousands of miles away has just declared war on your wallet. Seriously, this isn't about some distant foreign policy debate. This is a direct alert for your bank account, for your gas tank, and for your portfolio. We're going to break down exactly what's unfolding and, more importantly, what it means for you, starting with the one number that changes everything.
Here it is, $120. As of this morning, that is the price for a single barrel of Brent crude oil. Now, to put that in perspective, that is a jaw-dropping surge of over 23% in just 1 week. And it's all because a critical global choke point just got slammed shut.
And here's what that $120 barrel of oil is going to feel like for you. $5. That's the projected national average for a gallon of gas by April. And listen, this isn't some worst-case far-out scenario. Analysts are saying this is pretty much baked in if the crisis doesn't get solved, and fast.
So, as the price of energy just exploded, Wall Street pretty much imploded. The Dow Jones plummeted over 900 points in early trading. And you know, that's not just some number flashing on a screen. That is a real gut punch to 401ks and retirement accounts all across the country.
So you put it all together, and what do you get? These numbers paint a picture of a severe, energy-driven economic shock. And what this shock is doing is threatening the very stability of the American middle class. It's basically like a war tax being imposed on all of us through runaway inflation.
Okay, so how in the world do we get here? To understand how to protect your money, you first have to get a handle on the geopolitical flashpoint that lit this whole fuse. And believe me, it all escalated incredibly quickly.
The root of this whole crisis started back on February 28th. A military operation kicked off a massive power vacuum in Iran. And what happened over the next 10 days didn't just create a so-called new Iran, it completely upended the entire global energy market.
Just look at how fast this all went down. On February 28th, you have a decapitation strike. By March 8th, a successor is already in place. And then, just 1 day later, March 9th, that new leadership blockades the most critical oil artery on the entire planet. You know, this wasn't some slow burn. This was an explosion.
Now, right at the heart of this whole problem is the new supreme leader, Mujtaba Khamenei. This guy is a hardliner with incredibly deep ties to the Islamic Revolutionary Guard Corps, the IRGC. His lightning-fast rise to power signals a major shift, a pivot away from proxy warfare to direct state-on-state conflict. Any hope for de-escalation pretty much vanished the second he took power.
And the U.S. administration's response? Well, it was immediate and it was dismissive. This quote, calling the new leader a lightweight, basically signals a complete rejection of his legitimacy. This kind of harsh diplomatic stance tells you we are not heading for a quick and tidy resolution. We could be looking at a much longer, drawn-out conflict.
The math of this crisis is just staggering. By blockading the Strait of Hormuz, Iran has effectively trapped almost a fifth of the world's daily oil supply. But it's not just about the oil. Insurance rates for any ship that even thinks about passing through have skyrocketed by 650%, which basically freezes global shipping. This is exactly why the IMF is now throwing around the word stagflation, that's stagnant growth coupled with high inflation.
Okay, so that's the problem. It's huge, it's global, and yeah, it's hitting your wallet hard. But this is a survival guide, right? So let's pivot and talk about the solution. Because there's this unexpected toolkit that might just be the financial shield you need right now.
Believe it or not, the answer might lie in a piece of legislation passed back in 2025. The One Big Beautiful Bill Act, or OBBBA. So while this war is creating all these new costs, the OBBBA actually provides new tools for wealth protection that have suddenly become more critical than ever.
The OBBBA tax shield really has 3 core parts. Okay, first, you can now deduct your overtime pay, up to $12,500. With costs going up, this makes sure that extra work you're putting in isn't just getting eaten by taxes. Second, the SALT cap. That's the limit on your state and local tax deductions. It was raised to $40,000. Now, if you're a homeowner in a high-tax state, this is a massive boost of liquidity. The third step is all about what you do with that newfound cash. So let's be clear, these are not just some obscure loopholes. These tax provisions are your defense mechanism. They were literally designed to put cash back in your pocket. And in this kind of war-footing economy, that cash is your first line of defense against that war tax of inflation we talked about.
Now, tax defense is step one. But to truly survive and maybe even thrive in a war-footing economy, you need a whole new investment playbook. The market landscape has been completely redrawn in just 10 days.
I mean, this table really tells the whole story, doesn't it? Before the conflict, we had oil hovering around $90, and inflation was actually trending down to a manageable 2.8%. And now, oil has peaked over 120. Gold has surged to a record $28.50 an ounce as a safe haven, and inflation is projected to roar back to 4%. We are in a fundamentally different economic world than we were just a few weeks ago.
And this new environment creates very clear winners and losers. Money is rotating out of sectors that are vulnerable to high fuel costs and rising interest rates, think airlines and big tech, and it's flowing into scarcity and security. So energy and defense sectors are seeing a big benefit, while physical gold is really reasserting its role as the ultimate safe haven in times of geopolitical chaos.
So here it is, the complete strategy, what we're calling the 2026 war hedge. First, you use the OBBBA tax shields to protect your income and create some liquidity. Then, you reallocate that capital, moving it away from those vulnerable growth sectors and towards tangible, scarcity-driven assets that actually do well in a conflict economy. It's a two-pronged approach, defense and offense.
And that brings us to the final question, the one you really need to ask yourself. In this new reality of $120 oil and intense global conflict, is your financial plan a target, completely exposed to the shocks we've just laid out, or have you taken the steps to turn it into a fortress? The choice and now the tools are yours.